Hey everyone, hopefully you have a good day. My name's Andy. My channel's Finding Value. Today we're going to go over a bunch of different news updates, some gas prices, oil prices. I've got the housing starts and permits that's been updated today, which was yesterday. I'm doing this late, 3/17/2022. I'm going to go over some other information, oil and some Twitter stuff that I've been looking at. So I'd like to give everybody, get everybody up to speed on what's going on. So let's dive into what I've got, and I'll give you my financial opinion. What I've got here is a surge in energy prices suggests high probability of recession. This was one that Mark McGuire had posted. It was a Bloomberg, I think it was on a Bloomberg deal. I don't know who created this. Somebody created it. They're showing that the increase of energy prices basically were surging before all of these recessions. The one thing I want to talk about is the housing starts. I'll give you an update on the housing starts, and I'll give you what I think is driving this and what we're looking for as a leading indicator for a potential downturn if a recession is going to come. So I want to just step back. What is a recession and what causes recessions? The recessions, so before recessions, we have an expansion of a credit system. The money supply expands. On the back end, it's a contraction of the credit. Oil, in my opinion, is not the driver of it. That is the transmitter of inflation. Oil is the number one commodity. That's the transmitter of the inflation. The inflation is being driven by the housing starts and the new loans coming against those housing starts. So you have new homes being built with new loans going against it. In a fractional reserve banking system, you're expanding the money supply as those new loans come into the system against those new homes. That is the driver of the inflation. The transmission of that inflation is the oil. Oil's one of the greatest inflation hedges. It's the number one commodity that goes into everything. That transmits the inflation from the housing starts into everything else. So it's measuring roughly the same thing. And I'll get into the housing starts and some more stuff here. One thing I want to talk about before going to the housing starts, it says gas prices are already expected to top $5 a gallon, but experts lay out a scenario that could be much worse. And they're talking about this summer. They're not talking about sometime in the future. They're talking about this summer. So unfortunately, I'm going to read this real quick. Unfortunately, I see prices going higher from here. Scott Shelton, an energy specialist at the Commodity and Currency Investment Interdealer Broker, ICAP. And what he's looking at is inventory. I guarantee it, because that's what I'm looking at. We could see a national average of between $5 and $6 per gallon all summer long, with diesel prices even higher. The potential impact is so great that some experts are forecasting a greater likelihood of recession and stagflation. Goldman Sachs analysts now see a 35% risk of a recession in 2022, up from just 10% a year ago. They're saying that stagflation is the biggest risk facing the global economy. Rising gas prices are mainly a result of severe sanctions by the U.S. and its allies. I totally disagree with that. That is the author's opinion. That is not true, in my opinion. While the U.S. purchased only 3.3% of its crude from Russia in 2021 and around 7% of its total petroleum products in 2020, oil is ultimately priced by the highly interconnected global commodities market. That means rising oil prices are reflected at the pump worldwide, not just in countries that import Russian energy. Russia pumps out roughly 5 million barrels of crude each day. This hedge fund manager, Pierre Andurand, sees a path of $200 oil by the end of the year. We're nowhere near demand destruction levels, says the famed commodities trader. This guy has no relationship to this article. Separate thing. Totally agree with him. And my guess is something that we're going to see very soon to what he thinks. I think 200 oil by this year is possible. If I were to put a price projection, 150 to 250 is about where I'm at. But I'm not in the games of projections. I'm in the games of positioning for big moves that are coming up. Going back over to the housing starts, this is the driver of inflation. This is the driver of all of those things inflation related. It says new privately owned housing unit starts. We're up to 1.859 million. That is a monster number. We are now starting to get into an area that might rival the highest peaks of American expansionary phases that we've ever had. We're talking about the early 1970s and the peak boom in the mid to early 2000s. This is a boom that has to happen. This is going to be big, and it's going to last a long time, in my opinion. We are underbuilt by a large amount of homes. That means that we have to build 5.5 to 6.8 million homes, however you want to look at it from all these different estimates, above the average. So the average is about 1.5. We need to build 5.5 million above that 1.5 million average to catch it back up. It's going to take time. It's going to be inflationary. We could have some moves. Now, the dark gray lines, these gray lines that they show these circles of oil going up and having these recessions. Well, every time before the recession in 1970, we had a decline in housing starts, decline in housing starts, recession, decline in housing starts, recession, decline in housing starts, recession. Every decline resulted in a recession. What we need to be looking is not at the oil price that's the transmitter. We need to look at the generator of that inflation, which is the new private owned housing unit starts, which is this graph. We are going higher, no recession yet. We are too early to call for a recession. The likelihood of it increasing, yes, but you got to see this housing start fall. If they don't fall, no recession. We haven't had it. The only time that we've had a slight recession and it was contained into stocks only was the dot-com bubble. Every other time, no recession with this housing starts going up. So I think it's a very low likelihood if to have a recession with the housing starts going up. Now, the new privately owned housing unit permits, this is permits, is still incredibly high, 1.769 million. Anything above 1.5 is a positive number for growth. And these don't necessarily completely match each other. Permits usually come before housing starts. Last one was 1.6. And remember, this does fling around all over the place. And it depends on building materials as well. Looking at the strategic, now we're switching back to oil here. It says, Putin says U.S. imports only 3% of Russian oil, and they try to shift the blame onto Russia for the economic backlash of oil and gas import bans. That's the quote. Now, this is something different. The U.S. Strategic Petroleum Reserve, remember, this is the U.S. Strategic Petroleum Reserve, is declining. They are releasing oil from the reserve. We are going down from this U.S. Strategic Petroleum Reserves. This is dangerous, guys. They're depleting our inventory to keep prices lower. It's not going to work. We are going to see a very big squeeze coming up this year. End of 2022 is the year, this year, the end of 2022, beginning of 2023, we could go massive super spike style. So I don't know where the price is necessarily going to go. 200 could be a very low number. We could see something double or triple that if these inventories get completely used up. And this is, remember, this is the U.S. Strategic Petroleum Reserve. We have inventories getting up other places. We have to see demand destruction immediately, in my opinion. We're going to see $5, $6 gas very quick. Looking at the middle here, it says the narrative of blaming rising oil prices on Russia is ridiculous. This is the industry behind it seeing a chance to inflate prices due to a narrative. That's this person. It says, why are gasoline prices so high? Not Russia, also not Russia, also not Russia. It's Russia after we've got this massive move higher. Now, these people, when they post, they don't know anything about the oil market for the most part. Inventories have been declining. That is what's pushing this move. It has nothing to do with Russia. We have been underinvested in oil. We have a crunch coming up at the end of 2022 that could be bigger than anything that we've ever seen in history. Worldwide production out there with demand exceeding it, and the price being the only factor between inventory levels staying there and supply coming in. So we have to have demand destruction. We have, if it results in a recession, so be it. But we're going to have to stave that off. I've got a global one in here. I want a global X uranium. I threw this in here because I wanted to cover it real quick. It says the fact check, the life-changing moments upon us. And John posted this on Twitter. Coming on up, we break this line, guys. It's going to be a fun one. We're going to the moon. Now, moving on back to the lower left-hand side, this is West Texas oil from a big picture view. What do you see in this big picture view, guys? Everyone knows the booty bottom. This is the booty bottom, guys. We're coming up out of this bottom. You saw what Intrepid Potash did when it broke out. All these companies, the companies and the commodities, when they break out of these big bottoms, they usually take a run. Sometimes they sit here for a little bit, but we didn't really sit there very long on this left-hand side. So we could run dramatically from here. It's not going to be straight higher. Don't think that. But I think we're going to see a big run in oil here very, very soon. This one, I don't have a time frame on it, but we did come up all the way to 130. This is at 100. We came all the way up to 130. We came on back, and I think we're going to see another surge higher. But we got the double booty bottom that I wanted to show in oil. 2022 stores of value. I was reading this. This was posted. Geopolitical conflict and rising interest rates on the horizon have seen investors shift from risk assets to real assets. Does that sound like the finding value rotation of money? When I talk about rising interest rates, I don't even care about the geopolitical conflict. That always happens, it seems like. But the rising interest rates on the horizon have seen investors shift from risk assets to real assets. Happens every time in history. It says crude oil prices have reached 8-year highs after more than doubling since the start of 2021. Wheat prices have surged more than 35%. We've got gold has made up last year's losses and less than 10% away from its all-time highs. Then we've got the downside, Bitcoin. Since its all-time high of November of 2021, Bitcoin has dropped more than 40%. The S&P 500 IT sector is down 18.6%, while the energy sector is up 32.3% year to date. So these are some of the performances. Gold, 6.7, agricultural fund, 10.4, crude oil, 34.4, and then Bitcoin and S&P are down in terms of year to date. So that's what I wanted to cover today, guys. Yeah, I think I got everything there. I just want to keep everybody up to date. I think this summer is going to be a squeezy on oil and gasoline. It's going to get rough. I'm not cutting back my demand, guys. I love driving the cars in the summer. I'm going to save more money and I'm going to be able to budget for it. And I'm not going to be one who's going to be cutting back. I'm actually excited to drive more, as weird as that is. And if it costs me more, so be it. I've been saving my entire life, investing a whole bunch of money, and the investments are doing quite well. Hopefully you guys are partaking in it on the channel. You've got the same kind of mindset as me where you're getting in there, you're holding on to your shares, and we're getting some good moves, especially in oil. Uranium's done very well. And then I think gold and silver is going to do very well coming up. If that's the case, then I don't know. I don't think I'll be priced out of the market, even if it's at $5 or $6 a gallon. I'm still going to enjoy the cars, and we'll see what happens. Maybe I'll cut back on driving daily versus some of my pleasure driving, which I really do enjoy. That's really some of the only things that I do enjoy still doing. If you guys like the content, definitely, give me a thumbs up. Subscribe to the channel if you haven't already. Look at the Finding Value website if you want to join that website. I put picks on there. I just posted another pick here recently. It is a lithium play, and it also has some other minerals. It looks very cheap. It's a speculative play, but it looks pretty good. And if you're a platinum member, you can find out what that pick is. I've got some other picks as well released. You can see my portfolio. What I'm holding. I don't think that's necessarily a great indicator. I would more likely follow the picks that I'm posting most recently than what I have in my portfolio and try to match my portfolio because that's what I'm adding into, and I would add into whatever I'm adding into. That would be my my strategy. If I didn't know what I knew and I was following myself, I would choose the companies that I'm picking now to enter versus trying to mimic my portfolio, because some of them have gone up quite a bit, and they may or may not be at good buying opportunities at this second. Thanks for listening, guys. Catch you next time. This is Finding Value.